Hi, this is Jared Zimmer, Remax Properties. Thanks for tuning into the video blog this week. Something I've been asked a little bit this week a few times, and that we're going to be dealing with probably within the next year or two as the market continues to prove are taxes and some of the ways to deal with some of the taxes on your primary and investment properties. Right now, if you're selling your primary residence, there's what's called your capital gains tax. Capital gains tax for homeowners on your primary residence. I'll put this on the blog and type it if you can't read it. But what I want to cover there, capital gains tax, if it's on your primary residence and you sell, the proceeds, the gain of what you see, if you're a single homeowner, single individual, you're clear up to $250,000. If it's a couple, a joint filing, you're actually clear up to $500,000 of profits for your capital gains tax. That is for your primary residence. Another question that we're running into right now for investors is the 1031. Now, the 1031 tax exchange helps you avoid paying some of the taxes on the profit from when you sell one property and go into another. Big thing for the investors, again, you're going to want to bring this up with your accountant to cover all this, CPA, but I just want to give you some basic updates, some basic information here. Is a like-in-kind property. So if you sell a commercial property, they like to see that you roll it into another commercial property, investments, residential as you roll into other investment residential properties. The time frame that you're working on, there's a lot of confusion as far as the 1031 and your time frame. The day you close, let's just use January 1. January 1 you close. You have 45 days to name the properties that you're going to roll your money over into. 45 days. Most accountants that I've talked to said they like to see 3 properties named. You can close on all 3, you can close on 1. It's totally up to you. You can do more if you want. It just makes the taxes a little bit more complicated. You want to bring that up with your accountant. Something else that you're going to cover on here. So you have 45 days to name the property, and then you have 180 days from the day you closed to the day you initially closed to the day you want to close on your investment properties. So let's just go over this again real quick. You have 180 days from the date that you closed on your initial property. You have 45 days to name the property or properties, and then from the additional day 1 that you closed, you actually have 180 days to close on the investment property and avoid some of the taxes from rolling over the proceeds from one property to the other. One thing that did come up real quick, cover on this. Say you get past your 45 days, you get into 50, 60 days in the middle here, you decide, well, these properties aren't going to work, it cancels, what do you do? What happens to your 1031 money? It actually, because you put it into a 1031, your money is locked in. So if you decide to cancel and you're not going to close on one of those properties within that 45 days, your money is not refundable. You can't get it back until that 180 days. So it's just some simple, some real quick ideas, some questions that have come up this last week I'd like to go over. Again, I can't give you legal advice, can't give you tax advice. Please bring that up with your accountant, your CPA, but if I can answer any questions for you on the basic level, I'd love to do it. We run into this kind of stuff on a daily basis, and I'd love to be able to help you any way I can. Thanks for tuning in. You have a great day.